Welcome back. I'm Jeremy Safran. Well, gold is holding around $3,300 an ounce after hitting that record of $3,454 earlier this month. But this rally isn't following the usual script. Institutional flows are still uneven. ETF inflows have only just turned positives, yet central banks keep buying, especially China. A new World Gold Council survey found just this week that shows 29% of central bankers plan to increase their gold reserves in the next year. That's the highest level since the World Gold Council began tracking. And at the same time, 72% expect to cut their U.S. dollar holdings. More banks are also repatriating gold from New York and London, citing sanctions and geopolitical risk. Now, the Fed, it's held rates steady again this week, but for the first time, Governor Christopher Waller is openly calling for cuts, saying inflation looks pretty good and that the first cut could come as soon as July. Now, he downplayed the impact of Trump's new tariffs, calling it short-lived.
And right now, the data the last few months has been showing that trend inflation is looking pretty good, even on a 12-month basis. So I've labeled these good news rate cuts if inflation comes down to target, we can actually bring rates down. I've been saying this since about November of 23. So I think we're in that position and that we could do this and as early as July.
That split the message from Chair Powell, who warned that tariffs could reignite inflation and said the Fed should, quote, wait, but pressure is building. Trump is demanding cuts again, warning high rates are bleeding the country dry. Treasury interest costs have already hit $776 billion this year alone, now more than the U.S. spends on defense. And oil is rising for third week as Trump weighs military action against Iran. The White House says it will confirm and decide within 2 weeks. So where is the smart money going, and what do gold and Bitcoin really signal about the confidence in the system? Joining me now is Frank Holmes. He's the CEO and the CIO of U.S. Global Investors, also the executive chairman of Hive Digital, a unique lens on capital flows across gold, mining, and even that crypto world. It looks like you get your feet in just about everything. Hey, Frank?
Yeah, especially the alternative asset class like gold and Bitcoin.
Yeah, amen to that. And we got to get into it because I know you are launching a new ETF too. But before we do, let's start with this dual rally in gold and Bitcoin. I mean, you've called this a monetary protest. Is that what's happening again, or is there something, deeper driving it now?
Well, every time we see war that's taking place now in Iran, and then what we saw in Russia and Ukraine battle, I think you have to sit back and say there's going to be more money printing. And the more money printing, the greater the currency devaluation. And so what we're witnessing in America to compete against a particular China is a huge spend on AI to refurbish every part of national security. And from the art of war, Sun Tzu, the best thing to have no war is to have a strong defense department. And I think we're seeing that. And at the same time, we're seeing this predatory practice of China against America, de-dollarization, BRIC countries having meetings, and basically using the moral suasion. And I don't think the average investor is really cognizant, Jeremy, on what they've done under the dictatorship since Xi Jinping took over. So if we look at their military spending, they spend maybe on people about 1/4 of what the U.S. budget is. 2, they spend a lot less. When you look at the American budget, say for military, it's half of the budget is people. That's only 1/4 in China. They now have more warships than America and the Navy. He came up with this brilliant one road, one belt. And at first I thought it was a brilliant idea of building relationships around the world. But what's become is that, yes, we'll come in and we'll bring in Chinese workers and we'll build you roads and we'll build you ports, etc. But it now comes along with soft parts that you can't deal with trade with Taiwan, and you can't do this, you can't do that if you want this money. They have cut deals over $2 trillion, and there's 195 countries in the world, and they've done deals with more than 125 countries. So we now see that over 100 seaports around the world are owned by the Chinese government. This is outside of Hong Kong, Hutchison, Whampoa, that's really a capitalist model by the richest man in Hong Kong. No, I'm talking about Chinese government-controlled entities. So with that, they at the same time are doing assault on de-dollarization on the dollar. Other countries are saying, well, you don't have fungible currency around the world, so you have to buy more gold. So they've been buying more gold, and they basically have to buy all the gold that's produced every year for the next decade to get caught up to Fort Knox. And that would take gold to what, $20,000. That's the potential if that's what they were doing. But they've slowly, incrementally used their suasion with all these other countries, and we're seeing central bankers recognizing what's going on and increasing their exposure to gold. And I think that that's very significant, and is going to lend itself that gold trades before Trump is finished. My projections are $6,000, and it's just buy the dip and hodl. The difference in the gold world to the Bitcoin ecosystem is that every time gold stocks have a correction, people quit, they capitulate, and they don't believe in it right away. And there must be some conspiracy against gold. Bitcoiners just buy the dip and hold on for dear life. The difference in the memes, the difference in the commitment to the growth of that ecosystem. And so that's what you're seeing, this sort of trade-off, and me being a gold fund manager. And how could I have both? Well, both are portable wealth. And what's nice is that 60% of the world actually wants something tangible, so they want gold. 40% will buy something intangible, which is something like Bitcoin. They understand that intangible component as investors and savers.
I'm curious, when we talk about China, we got to go back to that for a second, because, I mean, it now holds a record 2,340 tons of gold. Many analysts say that they're underreporting that figure. I mean, is Beijing using gold as that quiet currency hedge that you said? I mean, I guess the bigger question is if they're serious about challenging the dollar, why don't they go further and back the yuan with gold,
Well, because they got to do it incrementally. Otherwise, the price of gold is going to be $20,000 or more. It's really will be a game changer. The other really interesting part to me is looking at the biggest gold producer in the world is Newmont, and Newmont's production is actually down, and they're buying back their stock. And they've got huge free cash flow. They're not buying the mid cap and junior stocks. So what does that tell you regarding the supply demand factors in the overall gold mining industry? I think the supply side is actually going to get tighter. And I think that that's where you're going to see this quarter, Jeremy. We're almost over this quarter, correct? We're only a couple of weeks before June 30th.
Yeah.
Well, what is the average price of gold this quarter so far versus the previous quarter? Is it higher or lower? What do you think?
Well, I'm assuming it's only going to go up, but we are Kitco here, Frank.
All right. From a year ago, this quarter, from March to June, April, May, and June, is gold much higher than a year ago?
Oh, yeah, absolutely. Yeah.
It's huge. So what do you think the gold producers are going to have?
Yeah.
What do you think they're going to rip? They're going to blow out all the numbers. They're growing at a much faster rate and revenue per share and cash flow per share than the overall stock market. I think their EBITDA, I think the numbers last quarter, my data points, I got so much data in my little head. It was like 34% growth in their cash flow and higher gross margins, but they're not running around buying each other. It's a very different world. So if they're not investing in exploration and development, they're not buying other assets, then there'll be some mergers and consolidation, but the supply is slowly going to get tighter and tighter. And you're going to have to get much higher gold prices to justify the risk of going and exploring and developing. So I think we're going into that scenario where gold is going to continue to run, but the gold stocks that have the discipline of revenue and cash flow per share, they're going to keep showing up in Investor Business Daily, which we saw last quarter. 50 stocks, they had 12 of them going into the quarter. based on price performance and revenue and cash flow anticipated. This quarter is even bigger. So I think the gold sector is really underloved and underappreciated based on the metrics of revenue growth and cash flow growth.
Yeah, absolutely. And a lot of these majors are just printing money at these levels on the margin side. Any one that particularly kind of stands out for you? I mean, a lot of them have continued to have quite a nice upside. And then there's a lot of juniors and mid-tier gold miners that are trading like gold is still under 2,000. I mean, are investors missing that generational entry point here? And where is it?
Well, I think there's a bit of a structural risk in Canada because the banks control 80% of all wealth and capital management. And anyone over the age of 65, you can speculate going to the casino, you can go to the racetrack, and you can buy a lottery ticket. But God, no, don't you buy a junior mining company. And so that does impact price discovery and the excitement of exploration that'll take place. But it will happen. And what we are seeing is that the volume this year on the Vancouver Stock Exchange, and we track the change in the volume along with the change in the price of the commodities. And so in this previous times, we've not had this final surge. So I would share with you that it's picking up, but the junior Vancouver Stock Exchange, the gold sector, is still lagging the bigger cap gold producers in price performance. So there is a huge potential. Pent-up demand will explode on the upside. And the big thing we've found is you want to be looking for the companies that have the most reserves per share on their balance sheet. They're the ones that will get taken over, or it'll be much easier to do capital funding. So we're monitoring and carefully looking at them. But our real focus in our Go AU product, Go Gold, listed on the New York Stock Exchange, is a quant way of looking for those companies which have momentum in their revenue and momentum in their cash flow on a per share basis. So Newmont didn't show up for most of the year. Now, a lot of money went there because it's big and liquid. So we own Kenross, and Kenross was up spectacularly well for us. We owned some of the royalty companies, in particular, gold royalty companies like Royal Gold, Wheaton Precious, Triple Flags. They've all Cisco. They've all had a good torquing, and they're showing up more and more in U.S. institutional accounts by non-gold investors. So there's a propensity to go and buy one of these gold royalty companies. And so one of the largest shareholders of, say, Franco-Nevada is in the non-gold Fidelity funds. And they want to have a business that has a higher margin and it's sort of their financial metrics. So the gold stocks are positioning themselves to look like a tech stock. If you just look at the math, the numbers, and say, take away the word gold, take away the word silver, just look at the relative math, they have phenomenal momentum. And I'm very excited about the asset class.
Yeah, interesting. I mean, a lot of people will be excited to hear about the gold miners particularly. I mean, some of those bigger caps, I mean, AEM, right? Agnico, just great run on that. Miners are still, somewhat lagging these gold gains. Meanwhile, Bitcoin miners like Marathon and Riot saw that explosive rally earlier in the cycle. You run a gold fund and chair a crypto miner. Where is capital being rewarded more fairly right now?
What happened, coming back for your readers in history, when the GLD first came out, there was lots of fanfare that anyone could go buy gold now. They didn't have to go to a great location like Kitco to buy physical gold. So I am a big believer that physical gold is important to own, and physical silver. But at the same time, for ease of going into your IRA or your RSP in Canada, is the idea of an ETF. It's much more liquid. And you found after the GLD came out, the regulatory world did not become so severe at being anti-gold like they used to be. It became more of an institutional. The same thing's happened with Bitcoin. And what we're seeing, what happened with gold, is all of a sudden gold starts to actually perform better than a lot of the gold stocks because the gold stocks really didn't have good governance on of being focused on return on invested capital. They kept making these crazy acquisitions at huge premiums, and eventually that just showed up. They were underperforming. Only a handful outperformed. So money went into the GLD, and that hurt a lot of the gold stocks. Well, today, the gold stocks today are much more, they get boards of directors, et cetera, much more disciplined and have a better idea about governance. So I think the gold stocks are going to have this revitalization that's going to take place. But for the Bitcoin, and it's like for Hive is lagged this year. I just can't believe it. Bitcoin is higher. We are the fastest growing Bitcoin expansion in the world of all the Bitcoin miners, going from 3 coins a day to 12 a day. With the same 25 key people, we're going to be doing 1.2 million a day by the fourth quarter. So we have that growth profile, but there's this sort of the money flows you can see are going into the ETFs, and so the only a few of the crypto mining companies actually are actually positive, but the big value is actually there. And you've seen something that's different than gold in Bitcoin mining. A lot of the Bitcoin miners hold on for dear life their own Bitcoin, or they've done these convertible note financings to buy more Bitcoin, like Michael Saylor. You don't have gold stocks doing that. Back in 2019, 2001, 3, 4, 5, you had Rob McEwen being a champion of having the highest grade gold producer, Goldcorp at the time, was the highest grades in the world, and he was holding his gold, and he had the best premium. So you're not seeing the IM Golds and companies like that really holding on for something very precious. They mine it and sell it. And so you're going to see that the companies that I believe the gold stocks, when they start buying more, they've got free cash flow, they should put gold on their balance sheet. And there's a big push today to put Bitcoin on your balance sheet. And it's interesting that now there's 60 public companies which are basically going out and taking some of the free cash flow to put on their balance sheet. These are their dynamics that are taking place in the capital markets.
Yeah, you're not wrong on that one. And I mean, markets are asking if the Fed is out of moves as interest costs now exceed the Pentagon's budget. Fed Governor Waller just opened the door to July rate cuts, saying inflation looks pretty good. That puts him at odds with Powell, who warned that Trump's tariffs could reignite inflation. Is the Fed already cornered with debt costs now above defense spending?
Yeah, I think that the rates will fall. I think it's much more about unemployment ratios. It's more important about the value of a house versus the relative income and how people can afford it. I think things like that are becoming more important for the Fed to drop the rates. What probably this price of oil went above the 50-day moving average. And it was a combination just before the Iranian strike, May 23rd, was probably the signal that an attack was going to take place. But it was very strategic attack. You have to go and look at that from at 50,000 feet and recognize a pattern of similarity. And that was what the Ukraine had done in Russia was a Trojan horse. And they basically had trucks planted deep in the heart of Russia, which laid idle there for months before the back doors opened, and out came all these drones to wipe out 30% of all their military jets. The same thing happened in Iran, how they were able to get equipment and stuff stored within their country. This idea of the Trojan horse is interesting for me. Has happened twice now. And what does that mean? It means that rates are going to fall because we're going to be scared about many different things. Well, I think that you're going to have a dual process. Military spending, jobs in military spending related, are going to go through the roof in Europe. Trump's going after them of spending, what percentage they're spending on the GDP, and he attacked Canada, Justin Trudeau, over it, not protecting America from the Russians and what the Russians were doing, and now Chinese said that they own the Arctic too. So there's this great concern. Well, when he did that in Europe, it changed. Well, and let me give you some big numbers. You know, the top 5 GDPs in the world is Germany. Well, we're talking about a $4.5 trillion economy that all of a sudden now is going to spend 5% on military. Do you know what their best military stock has done this year? It's up 220%. So they're going to build a complete military industrial complex all through Europe. And they'll make like a Boeing makes a part, and they have outsourced in every other state in America parts, and they assemble the final fighter plane or the part of a jet, whatever, in Seattle. But all the other parts are made all over the world. Or sorry, all over America. In Europe, they're going to start making the parts in all the different countries, and they'll have an assembly. So they're going to create a military industrial complex. And you can see the amount of money that's going into the ETFs in UK. So bad news of war is good news, because NATO ETF in London has gone through 2 billion. Van Eck, who's famous for his GDX and GDXJ gold fund, also went over and set up and bought a group in England, and his ETF in the military is exploded with $1 billion. Well, that's because they're going to spend money. They have to print money to do that, Jeremy. So this is only one of the best parts about gold, as both for monetary imbalances and fiscal imbalances, gold is becoming the darling asset class. Yeah. And what's so interesting, that I repeat this over and over, the gold and the GLD in America, and anyone that's bought Kitco gold through Kitco, they've done exceptionally well this century. They've outperformed the S&P 500. Over 80% of the time in the 25 years, gold has been positive. And so gold is going to become that more important darling. And I think all this military spending and rebuilding against the threat of Korea, like North Korea has sent soldiers in to help with Russia fight the Ukraine, and they need to make, they say, more weathered. They have to understand what fighting is about, etc. Why? Because if Ukraine gets taken over, well, then North Korea is going to invade South Korea. China's going to come into Taiwan. So now we come back to Iran. And what happened in Iran was an incident interesting that 3 weeks ago, it was a press somewhere that China was buying its oil from Iran, and they were going to take renminbi to buy military equipment from China. So that was the trade. Buy the oil, I'm going to sell you all your weaponry. And what oil fields got blown up first? Those that the Chinese are going to get oil from. Putin is happy because he's got oil prices finally going up. It helps because that's his largest source of revenue. But all of a sudden, it's a checkmate in a theory of global issues against Iran. And then they find out that was supposed to be a chemical factory facility was actually a nuclear facility. So that gets taken out. And now we have the 3 different shields that go over intercepting missiles coming into Israel. And the most important is the closest, tightest one is the Iron Dome. They've seen all the things that they can go wrong with it. So I think that before America starts building its dome, there's the theory that it's going to be built on the back of decentralization because of the success of Bitcoin. Can you believe that? Because Bitcoin is decentralized. And you know what other asset class is decentralized in the world that I love? Gold. Gold is decentralized. There's no one dictator of the price of gold. Some like to try to go and dictate it. There's no one guarantee that this is the price of how. So it's such an important asset class for legacy protection of wealth. Yeah. And so I'm very excited about where I see governments are going to go. If they're going to spend money, it's going to go into AI, it's going to go into military, they're going to value the country's currency. You're going to need gold. And at the same time, for the younger investor, they're going to be owning Bitcoin. So and we now have a government that understands that Bitcoin, like gold, means freedom. Portable wealth is freedom. And so we're seeing something that's coming together, which is the best of worlds for any alternative asset classes like gold and a Bitcoin as an asset class. And the success of how fast Bitcoin has grown is setting it up as an idea for military. So these are all incredibly quick how things are going, and they're very exciting.
Yeah, no, they are going very fast. And we got to talk about that ticker WAR in a minute because, speaking of strategic assets, there's another resource that's under threat, but this time it's digital as investors rotate back into gold for security. A growing number are looking at data as a new battlefield. Now, that brings us to the latest massive data breach. Tech giants like Apple, Meta, and Microsoft reportedly had sensitive user and employment data compromised through a breach involving the Snowflake cloud platform. The attackers targeted customer credentials and infiltrated terabytes of data, raising urgent questions about how secure the backbone of big tech really is. How exposed are we? And, what does that mean for investors betting on data infrastructure and cyber defense?
Well, the best defense is always to have a strong wall around you, and I don't think it's only going to grow. The concept of is now echoing in Canada, sovereign data centers. That word is being used. As I mentioned earlier, sovereign was always a gold coin. You think of all of a sudden now we're talking about the word how important sovereign is when it comes to data and protecting the data. I think it probably relates to Iran. Every day there's something like 80,000 cyber attacks in America, and about 5 of them are serious. And those 5 that are serious are usually coming from Iran, North Korea, Russia, and China, and then you've got some rogue kid hacker that thinks he's pretty smart, and he gets in there, and so this is ongoing. So the spend in cybersecurity will grow bigger. The other real paranoia over China are 2 big breaches that happen, and they're both called typhoons. And the first one I'll bring you, is most recent, was called SALT, S-A-L-T. And it's where the Chinese had infiltrated all the telecoms in Canada and the U.S. and were tracking and collecting the data that you were using and your mobile, whatever you're doing, they had data on you. And then prior to that, another great concern, they call that VOLT, VOLT, like voltage, Volt typhoon. And that is where the Chinese had infiltrated to shut down power stations and systems. So this will be the new idea of war, will to be taking out your data centers. So your data centers are going to become highly protective, like going onto a military campus. And that's already been going on now for over a decade in China. The data centers there are like a military base. And so I look at what happened in Iran, and then all of a sudden you've got 2 rogue countries, China and Iran, who are infamous in the global security of attacking companies. So naturally, I'm sure they turned on that weaponry to try to go and attack the Googles, et cetera. And this is going to be ongoing. So cybersecurity stocks are doing well. They will continue to have to create the ability for us to fluidly go in and out of the internet, but how we're going to feel safe from these type of attacks.
Yeah, interesting. So is the idea that WAR captures the kind of geopolitical and cybersecurity angle that SALT and Volt, let investors play offense kind of on that innovation and energy volatility?
Yeah, I think that's one reason why I created a new product, is because what I learned about the world of gold and the de-dollarization and that battle led by China. And then you find out how many ports they bought. And then you find out how much money they lent on one road, one belt of communism around the world. It's staggering. A classic was what Trump did in getting $2 trillion of orders from the Middle East. Mm-hmm. Well, during that period, everyone in Latin America, every president in Latin America and the Caribbean were invited for a free rock and roll trip to Beijing. And Beijing really put out a $9 billion quick line of credit to help anyone that any financial woes because of this tariff war. But don't worry, China's your friend. And so out of that came, Colombia said they're going to join One Road, One Belt. And so become part of that communist transition that's going on, like Venezuela.
You've essentially, you're kind of saying that we're in the permanent state of soft conflict. We got the trade, the data, the energy, and capital, all kind of being weaponized here, Frank. If that's true, what happens to the traditional 60-40 portfolios? I mean, where do you even hide?
Well, I think that thematic investing is going to become more important, and the idea where the quant world is, and I know that's as a fund group, that's the direction we have gone with Smart Beta 2.0, and to recalibrate every quarter on a very systematic basis that's been back tested through up and down cycles, rather than what I feel like. It has to be able to have this mathematical discipline. I think the world's going to evolve that way, but I'll give you some positive news. I'll give you some real positive stuff. The tariff war, you would think that cargo shipping would be sinking to the bottom of the ocean. And why do I say that? Well, 80% of all cargo in the world floats along the top of the ocean, 80%. And that's raw material from iron ore from Australia going up to China, or soybeans going to Japan, rice, everything, and manufactured cars from South Korea and Japan coming over to North America. Everything, 80% moves around on these cargo ships. The cargo ships are above their 50-day moving average. And that's not bearish. 08, 09, they were all crashing below. The rates now have changed. China has to take a longer path to move products, etc. So all of a sudden, these paths of shipping cargo has having a bump in their pricing power. Last year, this is an industry that had, like, I think 18% dividends on average. So I would be really worried, Jeremy. I'd be really concerned if 80% of all the blood in the world, that's all cargo, think of blood in your body, was being blocked. You'd have a heart attack. Well, it's flowing. There's no block here. So something else is positive that's happening. And what we're witnessing is this sort of war that's taking place, of brinkmanship between China and America. And Trump is basically went after everybody and then gives everyone a reprieve, but he's still focused on China, on the battle against China. And everything else was a side story, I believe, in my opinion. And shipping between China and America, yeah, it's going to go down. That's what's going to happen. But the shipping is going to turn around and create, hopefully under Carney in Canada, starts going east-west rather than north-south on pipeline and shipping and taking stuff east-west, so that it creates jobs all across the country. I think there'll be so many positive parts, like we're seeing that Europe has created an industrial complex, and Germany is going to spend more than what China spent 2 years ago on military. Well, all those components, they're metal. You need a lot of metal, but you need AI and you need skilled labor. And so that is a very, very positive way of job creation is being done over here. And the thing that I've seen in the U.S. on military spending, especially for healthcare, there's many inventions that have been made that now become public companies that are in every hospital and procedures in hospitals, because that's what they learn in war zones, how to protect a soldier, how to heal a soldier quickly, get him out of difficulty quickly. They're working on the ambulance drone here in San Antonio. So the drone will be able to go up and basically you're on your farm in the middle of the interior in British Columbia, or you're in Ontario, whatever, and you can basically roll over onto a drone and be taken right to the airport, or right to the hospital. Well, where do they get this idea from? From military. Yeah. So we're going to see AI and healthcare and military, in particular in the U.S., they're very closely aligned. And so I think that's going to create many jobs and skilled jobs in that space.
Fascinating time ahead, Frank. I wonder, you're in that arena. Is the ETF era kind of over? Is this the end of passive investing as we know it? We kind of need, it feels like, to be educated as investors right now.
Well, the beginning, it had to be like an index for the valuations of how they do what's called a create. So a bunch of money comes in and they had to know exactly what shares that would be bought in. And that was the basket, they called it. And that mechanism allowed it to get up to critical mass. So what we're seeing now is the growth of not passive, but basically stock pickers running ETFs. So I think it's evolved. What I have found is that smart beta is a combination of both. You need human beings. They're going to be checking the data all the time, overlooking the portfolio, and make decisions. Like our gold fund, our quant fund had a 46% turnover. That's incredible for the end of March. And the rotation to me was immense because it's looking for who has the strongest momentum in revenue and momentum in cash flow per share, or has a high free cash flow yield. So you saw this big rotation on companies that are really doing super well in driving revenue and cash flow. And that's helped it outperform a basic gold index. And the whole idea of that was to have that. So I think the ETF business is going to grow. I think the idea of thematic ETFs, which we've been doing, are continuing to grow. And so I remain pretty bullish on that end.
Yeah. And thematic, I guess that's key, right? And we'll be continuing to watch. Q3 is going to be interesting with this money printing going on, not from the Fed, but from the miners themselves.
Well, we want to just take a look at the G20 countries, and you can see, I can take the two of them that are most important for our audience. It's China and India, known as Chindia. The Chindia index is above its 50-day moving average. All this negative news since April the 2nd, it's popped, it's above. So the world's not coming to an end. And shipping is above. So another positive sign about global activity and the flow of business around the world. So when we go and look at those sort of macro factors, and we look at China and India, they love gold. And that's not going to go away. There's a cultural affinity for gold as an asset class. But their M2 is growing at almost 10%. So you've got 40% of the world's population, money printing is growing at almost 10%. That's very, very bullish for the world of gold. And then when you add other factors out, the U.S. is slightly turned up, but I like to follow where the biggest populations are, or the biggest GDPs. Like I said earlier about Germany being in the top 5 GDPs of the world, all of a sudden is going to spend 5% of their economic engine on military, is a huge number. And that's why some of their military stocks went up 200% this year.
Yeah, and that's why smart money is starting to allocate into those, as you mentioned. Emerging markets, that's interesting. And I mean, I'm going to keep it on this note. The world is not coming to an end. You heard it here for all those saying that we're perma bears over here at Kitco. Frank Holmes joining us over in Texas. Of course, he's the Chief Executive Officer and Chief Investment Officer at U.S. Global Investors and the Executive Chairman of Hive Digital. I hope to see you on the road soon.
Yeah, we got to talk about that. Yeah, there we go.
There we go. Now we can put the Hive hat on. Well, we covered the crypto universe a little bit. I mean, actually, I can ask you before we go. We're past that $100,000 mark. It seems like it's not as volatile in this range. You said 6,000 for gold. Where's Bitcoin going in the next 4 months?
Well, I think Bitcoin can go to $150,000 to $200,000. There'll be some government policy that's going to make it explode on the upside. And then when they come up with the regs, no one's going to be as happy as they thought they were going to be, and it'll have a correction. But I think over time, it's just going to trade higher and higher. I think that this administration realizes the assault on the US dollar, and they've seen the success of Tether. As outside of America, everyone wants the US dollar in all these emerging countries, but their banks come in and steal their money. So they have to keep it in digital format outside of the reach of banks. And so with that, Tether's had this incredible growth, being the most profitable company in the world. And they have over 50 tons of gold. Their gold Tether. They're not in Canada, or not in the U.S., but outside of that, people want to own U.S. dollars through their stablecoin. There's going to be a big push on stablecoin, and the U.S. government is going to want to have a piece of that. So we're going to see that if I was in Tether, I'd be worried that people are they're going to Uberize Tether so that they don't have to buy Tether to own US dollars. And Canada's going to come out. You don't have to do that. You can buy Canadian dollar through the government stable coin. It doesn't mean they're going to wipe out your $100 bills or your $10 bills in currency trade, but they want to be able to have that. And that will help with the assault against China, in the assault that China is having with the BRICS nations going after the US dollar for trade. So I think we're going to see the success of Bitcoin created Web3. The success of Bitcoin is creating the idea of an iron dome decentralized. The success of Bitcoin is created the launch of stable coins. Mm-hmm. And the success of the stable coins is going to be a big part for the US government to be positioned globally, to protect itself from a financial fluidity from the assault of China against the US dollar.
Yeah, Frank, I mean, last year, Circle's USDC lost its dollar peg after the SVB collapse. I mean, that kind of exposed how fragile even stablecoins could be if they scale globally without any oversight. Doesn't that hollow out the Fed's control over money itself?
Yeah, it's an interesting issue. How they make all their money is because they keep the interest. Yeah. So rising interest rates on treasury bills is great for stablecoin owners. Falling interest rates is bad for stablecoins because they don't charge you basis points. They basically get keep the interest, and that if they were to pay out the interest like a money market fund pays you at your bank account, then they would be deemed a security. So the only way to get around not being regulated by an SEC equivalent or a banking regulator equivalent is for the entity that launches that stable coin that buys the US dollars or Canadian dollars is they get to keep the interest. So the battle is going to be over interest rates and it's going to be over policy. So we're going to see it'll be exciting times, who's going to win. But the leadership for decentralized assets is really coming out of this administration. Trump and the team they have is very much pro the Bitcoin ecosystem. Consensus was just in Toronto. Eric Trump came to speak at it. Consensus was always anti-Bitcoin because it uses electricity. There were more proof of stake, they call it, and versus proof of work. But this year it was Toronto, all on Bitcoin mining. It's all important. So we are seeing some sort of policy changes at the very top. And I look at Paraguay where Hive is, and Paraguay had a new bank started as a digital bank only. And they have more than 25% of the country has bank accounts in 18 months.
And sovereigns, they seem to be picking up too. Interesting times, huh?
So yeah, it is. And so I think it's very exciting. But remember that 60% of gold demand is love. If they want something that they can touch and feel. They don't feel safe with a virtual world, the way a lot of younger people say they're accepting it. There will always be people that want to go on a holiday. You want to go to Mexico. I want to go to visit Greece. Favorite is Italy. Well, I can look at pictures. That's virtual. I want to go there and smell and taste the food. All my senses being loving the culture and the country, etc. Well, that's the person that wants to own gold. It's tangible. They want that. It's not going away. That's not going away.
Yeah, it's been fascinating just to watch the stability of it during some of these missile times as well. All right, Frank, appreciate your time today as always and wishing you nothing but the best.
Thank you, my friend.
Appreciate it.
Have a wonderful summer.
Yeah, you too. Enjoy it. We're starting to get the nice weather over on the West Coast, finally.
Take care. Bye.
All right, Serious Capital watches Kitco News. I'm Jeremy Safran. Subscribe now, sound off in the comments, and stay ahead of the next move. We'll see you next week.